Okay, so we're looking at a daily bar chart of the Dow, and the reason for looking at this is just to quickly point out something, which is taking the all-time high of 14,279 and taking 12.5% of that number and projecting downwards from the price itself gives you a target of 12,494 as the 12.5% GAN target. And as you can see, when the market reached it, it bounced sideways for several days before finally breaking through. It also happened to be the support from August 16th, 2007, the previous year's major low. And the other line here, horizontal line, is actually the low of 2007. So you can see that in the last 2 days, as we're recording this, it's the 24th of January, the last 2 days the market did very strong intraday penetrations of it and then closed above it, because it knows the significance of the last year's low. But as we've already seen, I think the significance has already been demonstrated, that the yearly lows have been taken out, and that is a very rare event in and of itself. Now we're looking at the weekly chart. Each bar is a week, and the reason for flipping to the daily was, here's that target we just looked at and how the market chopped sideways and then went through it. Now typically when a market chops sideways at one of these major GAN targets and then goes through, you're tending to look for the next target down as the doubling of this number. So you're looking at 25% of the high price of 14,279 projected downwards, and that gives you a target of 10,700. And that is the tendency, what tends to happen when price target is found to be support and then breaks down. Now the head and shoulders pattern that we see here also has a downside target, because it was completed when this neckline was taken out 3 weeks ago, and that gives us a target of 11,313, which has in fact almost been achieved. What remains on this chart to explain is these red and yellow lines. What are they? Okay. The yellow lines are Fibonacci levels drawn from the low of October 2002 up to the high of October 2007, and the red lines are Fibonacci levels drawn from the extreme low of this whole trading range in ending well, the low is in October of 2004 back up to the same high. And so if we now go a little bit closer back to the picture we were just looking at, we can see how these two sets of Fibonacci levels are interacting with our other price targets. For example, the 25% GAN projection target down is also the 50% retracement back to the lows of 2002, which incidentally also gave some support here, and you've got support coming in at this level too. So these kind of things, this cluster tends to act as an attractor for the price, especially as we said, when there's a tendency for it to want to go to 25% right now. The red lines also have some significance. We can see again that the head and shoulders target is being backed up by the 618 Fibonacci retracement back to the lows of 2004. There's a cluster there too, and in fact again it's almost been achieved. So to finish off this picture very quickly on the short term, looking at the daily chart, I think there is going to be a bounce over the next few days. It's certainly warranted given the violent downside action we've seen of late. Just take a look at the lower Bollinger Band here and you can see how enormous has been the penetration. So this is really setting up for a very strong bounce. It will look as if the market is suddenly buoyant or bullish, and all the goons on the TV shows will be raving about how the market's recovering. But it's actually just a correction, and we've already seen what the long-term picture is, which is profoundly negative. Now, if I had to guess, I would say that the market will bounce quite strongly, and it's going to head up to around the 12,650, or to be exact, 51 area. And I get that simply from looking at this range here, measuring this range and projecting it from the low upwards. So if one can be optimistic and assume that the bounce is going to be equal to the range that it previously experienced when it did a correction, we're looking at 12,651, which also happens to correspond to the 50% retracement between this high and this low, which you can see here as the green line. Very, very close to that number, and it's also very close to the 382 Fibonacci retracement, 38.2% from the high of the all-time high down to the same lows. So they're all coming in roughly the same number, and of course if you notice we've got that 12.5% projection which you had previously up here, which gave us a support zone around here. So I would tend to assume that it's going to trade up to about these levels, maybe as high as 12,651 as a correction, and then look to top out and trade lower in harmony with the long-term picture we've been talking about. Ultimately, I would expect this line, the low of last year, to be broken on a closing basis. It could happen this January quite easily, it might happen next month, but the bottom line is this is a profoundly negative picture on the Dow, such as we've never seen before. You've seen how I've demonstrated how the top came in congruent with very long-term cycle points as well as price targets. There are doubtless more which I will be investigating in videos to come as I continue to analyze the situation. But if you happen to be a long-term institutional investor, this is the kind of scenario where you don't really want to be involved with the stock markets anymore in the long term, and would be moving from stocks to bonds or cash. And certainly if you're a sort of short-term private trader at home and you're able to, this is where you'd be looking to take shorts on the Dow or the S&P or whatever. So I will be following this up with other videos obviously as things develop, and we'll be looking at other markets such as the S&P and international markets, so stay tuned. I hope you enjoyed this analysis and I hope it's been helpful for you. So this is Asoka Selvaraja of OnlineTradingRebel.com, and do check out the free report I have for you available at the website OnlineTradingRebel.com, which is entitled The 7 Deadly Mistakes of Online Trading. I think you will find it very informative. Thank you and goodbye for now.